Today, we will be discussing about how to navigate during a volatile market. And right now, in the last couple of days, even way back from March beginning, right? Whoever have been attending our sessions or our live interactions, we have been always discussing when the mid cap and the small cap index have advanced in a great level in the last 1 year, there is definitely a time where price correction and a time correction will be there, right? So that is what is happening now. And considering that there are various factors which are also impacting, be it like the regulators' action on NBFC companies, right? Be it on the small cap and mid cap steep rise, right? And these things coming together at a time has led to the market correction. So if your portfolio is bleeding more than the market, what are the actionables we have to do, or what are the things we should not be doing also, we will be looking in this particular discussion. And remember, for a short term, right? For a short term, maybe there is a market volatility now, but on a medium and a long term view, Indian stock market is positioned very well. There is no weakness. Considering the macroeconomic conditions, we are very strong. So the medium and long term view is intact. It is highly bullish in the Indian stock market. Just that we need to cross over this short term volatility. And also, as we are in March, right, there are a lot of big players or even many of the retail investors, right, as it is a financial year closure, on the taxation part also, right? Any positions which are in loss, they try to book the short-term capital losses, right, in order to adjust the taxation. So this volatility is common in March. But yes, going forward, considering the more economical indicators which are favorable for the Indian market, there can be a very good run for a medium and long-term view, right? So let me share my screen and let's broadly discuss, right, what are the things we have to do when the portfolio is bleeding more than the market, right? When the portfolio is bleeding more than market, yes. So if your positions or the stocks which are holding are not stronger companies, it can go down than the extent where market falls, right? If the market is falling by, let's say, 5%, if your portfolio is bleeding more than 5%, 8%, 10%, what are the actionables we have to do, right? We'll be discussing now. So the first important segment which you need to keep in your mind is never say market is wrong and I am right, right? Yeah, there are many people. Sir, I've done my entire research. The stock is very good fundamentally, and technically also it is a wonderful company. So even the market is hinting me something, I will not bother about it, right? I'll just be with my own calls. No. From couple of weeks before, right, in our live sessions we have discussed the mid cap index or the small cap index is consolidating, right, or it is looking weaker. Do not overtrade, right? So market has given signals much earlier. So never say market is wrong and I am right. Rather accept and learn and move forward, right? Do not curse the markets, right? Do not curse the markets. Second, do not try to catch a falling knife. Sir, there are a couple of companies which have been observing, and these companies have corrected by more than 20%, right? Has corrected by more than 30%. So I think this is a good level for me to add. What if from those levels, if the company is further falling, and even whoever have been following averaging down mechanism or trying to catch a falling knife, right? Or trying to enter into stocks at every dip. If you have just done this exercise like couple of weeks or couple of months, right now with this fall, it would have even declined more. And even from here going forward, we cannot say that the market will immediately revive, right? So what you can do, instead of catching a falling knife, let the prices consolidate and show some buying momentum, build up along with the volumes. So I'll just give you an example. Let's say there is a X private limited which you are tracking, and because of some reason it is declining. It is a fundamentally very strong company. Technically also has been good up till last month, but immediately because of the overall market fall, because of the overall sentiments in the market, it has been declining. Rather than adding here, again accumulating, right? Averaging down, what you need to do, let the stock price consolidate, right? Let it pick some momentum. Let it form a base, right? Let it form a base. And after that, when you see some buying interest coming, when the stock started moving, right? This is an opportunity for you to add, right? The best opportunity will be when the stock is consolidating, and if you draw your resistance level, right? If you draw your horizontal line using a trading view, whenever it is crossing its breakout or when it is crossing its resistance along with strong volumes, right? Here, if you also see there is more buying interest coming here, this is a good pointer for you to add, right? Rather than bottom fishing or trying to catch a falling knife, let the stock price consolidate, show some buying momentum. How will you know that there is a buying happening? You get positive candles and volumes will be there. It's fine, sir. I did not enter at these levels. After the momentum started, I have entered at these levels, right? So I have missed this particular part, right? Maybe here the stock is at 85 rupees. And here, when you have waited for the prices to consolidate and volumes have been coming and it is moving in the upward direction, sir, I've entered at 95 rupees. I missed that 10 rupees. It is fine, right? You need not enter at the lowest price to catch the entire momentum in the stock, right? No, you can wait and let that 10 rupees what you are missing be a trade-off, right? I'm just giving an example. Instead of entering at 95, if you're entering at 85, what if it further goes down, right? Further goes down. So yes, I repeat, do not try to catch a falling knife. Let the prices consolidate, show some buying momentum, and then you can enter in order to ensure your entries are right, right? And it's not about you catching the bottom in stocks, right? So do not try to enter the stocks. Yes, this is the lowest price of the stock. This is the 52-week low. I think beyond this, the stock cannot fall. So let me enter there. No. Rather than identifying or rather than hunting for stocks which are available at a 52-week low, it's more important to identify when you see a U-turn in stocks. So identify those companies where it has fallen, and when it is taking a U-turn, when it is increasing with some good volumes, those companies should be in your radar, right? Those companies should be in your radar. Now what we will do, let me further go deeper into this, right? Go deeper into this. So there are few investors where they do revenge trading, right? Revenge trading. So what do you mean by revenge trading? Sir, as I have been losing in my portfolio, how much more I lose? So I'll be adding more positions which are available at a good prices, right? So over trading in the market. Please understand, not taking a position, right? Or being idle is more important than over trading in the market which is not favorable for you. I repeat, when the market is not favorable, do not do anything. Rather observe, prepare a watch list of companies, prepare your stocks which you can enter in the next bull run. And that is why in the last couple of weeks also we have been discussing on a broader index, large cap wise, we see some consolidation, or even we have seen an uptrend itself, right? In Nifty 50 or even Bank Nifty, we have seen an uptrend. We did not see a huge downward movement. But coming to mid cap or the small cap index wise, when it has been consolidating or it is showing weakness in your charts, we have been very clear that do not take aggressive positions. Any entry should be very, very selective, which speaks about this particular point, right? Do not overtrade when the market is not favorable in your direction, and do not do, right? Do not do revenge trading, right? Just that I've lost some money in the market, I wanted to recover that, and I'll be taking heavy positions. How long the market will fall? So I will take many positions in the market. No. At this time, I would ask every one of you to watch and let the prices consolidate, and then you can take your entries, right? And respect risk, right? Respecting risk. So define your risk, right? Define your risk, define your reward. So, sir, yes, I am a conservative investor. I would not be accepting more losses. So any position after my first tranche, if it is declining by more than 6%, I'll be exiting, right? Sir, I have a little higher risk taking capability and I've been in the market for more than 3 years, 5 years. So I'll be taking up to 8%, maximum 10%, right? Define your risk. Every individual has his own risk levels, right? You have to define that. And even before entering into a stock, you have to define what is your maximum risk you can take or what is the maximum stop loss, and respect that. Similarly, for reward, yes, when my reward is 2 times of my risk, let's say for this position which I am entering, X Private Limited, my risk in the stock is maximum 8%. When my reward is 2 times of it or 3 times of it, when it is moving more than 16%, when it is moving more than 24%, I'll be doing my profit booking, right? So define your risk to reward levels and accordingly react, right? But do not take huge risks. If your risk level is 8%, and if you are just holding on to the stock with the assumption that it will bounce back, and you are accumulating your losses, as you are accumulating more losses, to just come into a break even, it will take a very long period of time. Okay. And the next one is about stop loss, right? So as I said, for a conservative investor, 8% or 6% is what you have to book, and do not let your position to deplete by more than, right, to deplete by more than 10% and above, right? 10% and above, and book your profits in all the opportunities, right? Book your profits. So, sir, a particular company I have already made a 30% or a 40% returns, but the stock is declining below its 21 EMA, right? So let me give you an example, right? Let me give you an example. Let's say you have loaded a company in TradingView, right? This particular company has been trending very well, right? Has been in an upward journey, and within 1 month or 3 months, you have made more than 30-40%. Now you have loaded your EMA 21, and your EMA 21 is well below your stock movement, right? It is in your trading zone. But as it moves forward, right? As it moves forward, whenever, right? Whenever your stock has declined below your EMA 21, right? Even let me do one thing. I'll be taking you through a trading view, right? I'll be taking you through trading view, and let's observe with couple of examples, right? Let's observe with couple of examples. So if you look at Nifty 50, right? If you look at overall Nifty 50, so Nifty 50 versus EMA 21, right? EMA 21. So as long as the Nifty 50 is above your EMA 21, right? Above your EMA 21, it means yes, market has been overall good, but it has been declining below your EMA 21. It is a reflection of weakness, right? It is a reflection of weakness. Similarly, let's say someone have been tracking ICICI Bank, right? For a short-term investment, right? For a short-term investment. And even right now, ICICI Bank is above your EMA 21, right? Is above your EMA 21. So now short-term trend, it's looking okay to be there. But whenever it declines below this, right? Whenever it declines below your EMA 21, it's better we do your profit booking. If you are already there, you reduce your position. Sir, I have like 500 shares. You reduce 250 shares. You do your profit booking. EMA 21 implies the closing prices of ICICI Bank for the last 21 days, right? So for the last 21 days, whatever is the closing price of ICICI Bank, there will be an average line which will be drawn, giving more weightage to the latest closing prices. So if the stock price is declining below EMA 21, there is a sign of weakness there, right? There is a sign of weakness. Like Hindustan Aeronautics Limited, right? In the defense space, one of the company which has been strong, and from a very long period, even from November, it has been completely above EMA 21, right? Right now, if there is some weakness here, and it's falling below your EMA 21, it's better to reduce the position. And now just observe the difference, right? Nifty 50, in the yesterday's trading session, it has been below EMA 21. But if you'll observe CNX small cap, right? Or the small cap index, when did we observe? From almost 5th March or even 6th March, Nifty small cap index has been below your EMA 21. And that's the reason whoever have been attending our discussions or our live sessions, way back from March starting itself, we have discussed, right? When the small cap index has been consolidating from almost these levels, and when it has come below your EMA 21, it's better we be slow in the small cap or the mid cap. This is the reason, right? The same learning you can also apply in your stocks also, right? In your stocks also. So yes, the positions which are already you are in a profit and it is falling below your EMA 21, it's not required to completely exit the entire position. But if you can book your profits, you can reduce your exposure, you can reduce the position sizing and ensure you do not give your profits back to the market, right? Ensure you do not give your profits back to the market. Rather, you do your profit booking. And the seventh most important thing, which I want every one of you to think subconsciously. I do not want any one of you to be a forced investor, right? Do not become a forced investor. So what do I mean by that? Sir, I've had some losses. I've already lost 6%, 8% I've already lost, right? I think this will revive. I waited for another 2-3 days. It has fallen down by 15%, 20%, right? as I do not want to accumulate losses, right? I've been averaging down, right? Averaging down. And as I'm a long-term investor, I think it will revive back, right? Do not average down with the misconception of long-term holding. Until and unless a stock is a strong, fundamentally good company, do not just hold it and do not become a forced long-term investor until and unless the stock demands. For example, sir, Warren Beverages Limited or a Trent Limited, right? Or even any company which are tracking for a long term on weekly time frame, for a weekly time frame stock, maybe last Friday, right? The last working day of that week, you observe what is happening, right? So Friday between 3 to 3:30, if the stock is giving you an exit, you move out, right? You check on weekly time frame for the long term companies. For the short term, you check on daily. But it is fundamentally weak company and not so strong for a longer period of time. Just that you accumulated losses, you just carry forward for a very long period with the misconception that I'm a long-term investor or the stock I'll hold for a very, very long time. No, right? No. Until and unless the stock demands, do not hold it for long term. And you can have that doubt, sir, why should I wait till the last Friday? So any company, if you have taken for long term and your entry happened because of a weekly time frame, right? Your exits also should be observed under weekly. Do not daily look at it or do not observe on a daily chart because there'll be a lot of noise, right? Let's say on Monday, let's say your entry price is 100 rupees when you have entered, right? Going forward in the next week, on Monday, the stock has moved to 110, right? I'm just giving an assumption, right? Again, on Wednesday, because of some market fall, right? The stock has fallen down by 90 rupees, right? Again, it has depreciated by 85 rupees, right? You just need not be in a scenario of completely exiting, right? Of completely exiting. Maybe what you can do, if your entry happened because of a weekly chart, your exit also should be looked upon on a weekly. What happens in the market, you do not know, right? Maybe on a Thursday, it would be again coming back to 95. Again on a Friday, it would be again coming to 100, right? You have entered at the same price and also on the Friday at the same price. So this did not give you an exit. So what do I mean is, if your entry happened on a weekly chart, follow your exit also on a weekly, right? Even the positions which are already in your portfolio. Sir, I assume or I kept this portfolio, these stocks in my portfolio to be under weekly for more than 3 years, 5 years. Follow your weekly time frame, right? Follow your 30 weeks EMA, right? Do not prematurely exit just with a sudden fall of 10-20% because of the overall market fall, right? Because of the overall market fall, right? So these are some of the important pointers, right? These are some of the important pointers I want every one of you to follow during a market correction or anytime where the market, anytime when the portfolio is bleeding. Do not panic. And as I have told at the starting of this discussion, this is just something which happens in market time and then. And we have seen earlier also, when there is a market fall, it will take very few days or few weeks to again pick up. And on a short term, right now we are seeing some volatility. So as of now, do not overtrade, right? Do not take aggressive positions. Be very selective, and it's okay to be in cash because cash is king and cash is also a position, right? So if you have liquidated some stocks, be there, wait for the right opportunity, wait for the market to revive, right? Wait for the market to revive and be very selective in your entries, and just keep in your mind the medium and long term view of the Indian stock market is intact. There are a lot of opportunities. And once the market retrieves back, the positions which are either consolidating or which are flat and exhibiting strength even during this market fall are the first stocks which will bounce back. And even those positions which have depleted, which are fundamentally stronger, or in the last couple of quarters, the earning results have been strong. Technically, also, they have been strong because of the overall market fall. The stocks have declined. These companies will pick up very fast once the market upbeat starts, right? So do not panic and do not do any panic selling. Just follow your system, follow your buy and sell rules, right? Follow your buy and sell rules. Okay, good.